Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Asia-Pacific equities were mixed. However, China, Hong Kong, and Australia advanced, as did the Nikkei. Stoxx 600 in Europe is up over 1%, and if it continues, will be the largest monthly gain. Futures in the USA are 1.0% to 1.3% higher. The dollar is under pressure. All major currencies are currently gaining against the greenback, led by Scandis and the Antipodeans. Gold is currently recovering from a 3-month low near $1,832 earlier today. It is under new selling pressure in Europe this morning, ahead of $1,855. After falling to $98.20 in June, the WTI is now rebounding. It stalled at 104. Asian Pacific market. China's CPI rose due to higher food and energy prices, but today's inflation report revealed the effects of COVID lockdowns. Consumer prices increased 2.1% year-over-year, an increase of 1.5% and slightly higher than what was expected. Japanese officials warned about sharp movements in the exchange rate, and the market has followed their lead. The dollar has a narrow range against the Japanese yen. It is within the JPY 130 range from yesterday. The Australian dollar reached the $0.6900 level, its lowest point since mid-2020. Today, it has recovered to the 0.7000 level. Market of euro. The base of the euro is now at $1.0480 to $1.0490. To confirm the reversal, a move above $1.06 will be required. Swaps market prices in a 20 basis point hike for the July ECB meeting. Bloomberg's survey continues to forecast a euro recovery. This could be a sign that the euro bulls are not giving up. They see it at $1.07 by the end June and at 1.11 by the end. There may be more signs of capitulation in the futures market. The net speculative position changed to short last week for the first time in the past year. The euro trades in a range of about quarter cents on either side $1.0550, ahead of the US CPI report. Sterling is still within Monday's range. Market of America. Through March, the year-over-year pace for US CPI increased 7 months in a row. While everyone knows that inflation is high, the theory is that interest rates will rise if inflation is at a peak. For the past 6 weeks, the US dollar has been rising against the Canadian dollar and is currently up over 1%. Canada's April job creation was disappointing. Full-time jobs fell. However, the economy is doing well, and this was not a fluke. At the end of this month, the first quarter GDP will be available. It is expected to rise around 4% annually, which would place it at the top among the major economies. The central bank raises rates and allows the balance sheet shrink. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.